Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And as every weekend, I want to give you my weekly update on week 18 of 2021. So let's go. I want to go through the reported earnings last week from the companies out of my portfolio. Will tell about my sells and buys last week, the received dividends, and the performance overall. So let's start with the Q1 earnings. And last week was really busy. Activision Blizzard, Jack Henry, Stampscom, Leggett & Platt, and Allstate all reported the Q1 earnings. And just start with Leggett & Platt. And Leggett & Platt posted strong numbers with revenue growing by 10% year over year to $1.15 billion. EPS reached a first quarter record of 64 cents per share, an increasing of 31 cents compared to Q1 of last year. And with these very strong numbers, Leggett & Platt also announced an increase in the dividend to 42 cents per share, which is an increase of 5% from the prior dividend of 40 cents. So now we have a forward dividend yield of 3.3%. And after these numbers came out, the stock just jumped up to right now $57.53. And I bought the main shares for me in May 2020 for $27.81 shares. And so I'm up already 104%. Here you can see inside to my real money portfolio with Leggett & Platt, but all the other companies too. And if you're new to my channel, you find deeper analysis to all of these companies on my channel. So check this out. And if you like this and if you find some value or investment ideas in that, then just subscribe to my channel, like and share these videos, and then you help me a lot for my little channel. When you subscribe to my channel, you will be notified when there is a new video up. So thank you in advance. So next up, Allstate also reported Q1 earnings, and also this earnings beat the analyst estimates by nearly 60%, so quite a bit. The company said adjusted earnings rose to $6.11 per share, well above average analyst estimates of $3.88. The revenue rose 26% to $12.45 billion. And so overall, also very, very strong numbers of Allstate. And so also the stock of Allstate just jumped up after they reported these numbers to now $132.26. I bought my shares for $117 just a month ago. And so also this position is almost up 13% already. And next, also Jack Henry beats the earnings but misses on the revenues. Jack Henry earnings of 95 cents per share, which surpassed the SEC consensus estimate by 10.5%. Further, the bottom line increased 1.1% but decreased 1% year over year. Revenues improved 1% year over year and 2.7% to $433.8 million. However, the top line missed the SEC consensus estimate of $436.6 million a bit. So overall, good earnings, revenue not that good, under the estimate one. I would say still solid numbers for Jack Henry. I bought my shares of Jack Henry, or at least the most of them, at the 2nd of December 2019 when I started this portfolio, and then over time I added another 5 shares for a purchase average price of $150.14, and right now Jack Henry is traded at $156, and so I'm up 4.8% overall. Also, Activision Blizzard reported their Q1 earnings, and Activision Blizzard have earnings of 98 cents per share, increased 28.9% year over year. The revenues increased by 27.2%. So also very, very strong numbers for Activision Blizzard. And so the stocks of Activision Blizzard, after they reported these numbers, also jumped up a lot to now $94.80, and I'm up with my position 32% overall. And I bought my position last year in June for in average $71.94. And last but not least, Stamps.com also reported Q1 earnings, and these earnings of $2.08 per share, beating the SEC consensus estimate of $1.63 per share. This is an earnings surprise of 27.61%, so quite a lot. But after Stamps.com reported this earnings yesterday, the stock just fell over 7% at the start of the session, but then recovered to minus 3% and is right now traded at $185.90. So it seems like the market even expected a little bit better, or at least the guidance a little bit better. For me, overall, everything is fine. Nothing is wrong with this investment. I will just stick with it and with my small position. I bought my position on March 8, 2021 for $180.05, and so I'm up 3% right now. Then take a look at my transactions from last week. First of all, I sold my Walt Disney shares. I sold my shares on May 5th for $183.50. And so I gained around 81% with my position because I bought last year in the depth of the pandemic a little bit over $100. And the reason I sold is that, of course, Walt Disney is a great company, and with Disney Plus, they just made a home run. But it seems like right now the stock is just overvalued. I just revaluated this at the start of the week and then decided to sell because I think the stock is just run very, very hot. And so it seemed overvalued for me. And this is the reason I sold my stocks right now. And of course, if we have a correction, a crash, whatever, and there's a possibility to buy them back maybe for $130, $120, something like this, then maybe I will do that. Right now, I think there are better opportunities in the market. And so I added some more shares in MI Homes. MI Homes I bought before and then just added another 11 shares on May 5th for $72.28, and now I have 50 shares with an average purchase price of $63.72. And the reason I added to that is that last week I also made a video about that. MI Homes just destroyed and beat the Q1 earnings estimates, and it seems like this company is really on the right path and still with an PE ratio of around 8 still looks so cheap. And so I added just some more shares. And on the other hand, I also added to my position in Alibaba. On May 5th, I bought another 7 shares of Alibaba for $228.17, and now overall I have 22 shares of Alibaba for an average purchase price of $231.43. And yeah, Alibaba is quite weak right now, but when you do an intrinsic value valuation, then it really seems like Alibaba is really cheap in an overall so expensive market. And so I decided to add more of this great company. And then I also received dividends last week. I received my dividends from Activision Blizzard, and this was after the withhold tax $7.99. Not much, but at least a little bit. And after all these transactions and these dividends, my whole pie of my portfolio looked like that. Berkshire Hathaway, which is very strong lately, is my biggest position now with 7.88%, just followed by Intel, which is very weak lately after they reported their earnings last week, which with 7.87%, and then so on. You can see share for every company of my portfolio, and my cash position just grew to now 26%, and this is a lot. This is more than I want. But in this overall very high valued market, the Schiller PE ratio right now is at 37, which is historical high. Just in the dot-com bubble it was higher, and the median is at 15.83. So it seems like we are really high in a high evaluated market. So it's really difficult to find good and safe long-term investments for reasonable prices. But on the other hand, when you compare the results of lump sum investment and dollar cost averaging, then you see that lump sum investing seems to beat the dollar cost average all the time. I would like to be higher invested, at least 80% or 85%, but it's really difficult for me to find good investments right now. And this is just one graph I found to this comparison between the lump sum investment and the dollar cost averaging. You find also other over longer periods of time, and it seems like all the time the lump sum investment at any point beat the dollar cost averaging. With that, take a look at my performance. First of all, a view on the performance of every single stock in my portfolio, and you see right now Imperial Oil is on the top with 110% of gains, followed by Legend & Platt. And of course, also with this too, at some point you come to a point where it seems like it's way overvalued. Imperial Oil, of course, belongs a lot to the oil price. And so I said that also in other videos. Oil price, of course, is very cyclical. Right now we're a little bit under $70 per barrel. If the oil price will go up to $75 or $80, something in the range of that, then I think it's also time to sell Imperial Oil, because then at some point the cyclic will just drop down again. And with that, then the stock price of Imperial Oil too. I have to keep that in mind. It's likely that sooner or later I will sell my position in Imperial Oil. And with Legend & Platt, of course, with the rise of the stock price, expected return for the future get less and less. And so I think when Legend & Platt hit $60, $65, then maybe also it's time to sell, even if it's a great company, which just currently, I talked before, just reported great numbers. And so you see every position in my portfolio. And as I said, you find deeper analysis to all of them on my channel. So feel free to check this out. And with this portfolio, which started at the 2nd of December 2019, I have now a performance of 71.69%, which is a massive outperformance of almost 36% to the S&P 500 over the same time span. So very good. I'm very happy about that. And we will see how this will work out. And if you like this whole idea of long-term value investment, of the transparency to look into my real money portfolio, then please subscribe, like and share this video, and then we will see the next time with the analysis of another stock. See you then. Take care. Bye bye.